IT sector has been buzzing in trade, and we have Anisha in fact joining us to give us more details on that, given the fact that all 4 companies have come out with numbers, stocks have reacted. What now going forward, Anisha?
Well, looks like the stocks have reacted ahead of the curve clearly because yes, the earnings were a beat, but not to the extent the kind of market moves that we had seen. And that's why you're seeing a bit of tempering down. Up was up around 10%, but now it's cooled off. It's trading with a gain of around 5% because yes, the earnings were a beat versus expectation, but none of the companies has actually called out the reversal of discretionary spend as yet. We did speak with all of the managements. TCS said yes, FY25 will be better than FY24. Yes, BFS has probably bottomed out, but we're still not calling the reversal of discretionary spend. Having said that, the silver lining is the TCS management did point to the fact that whenever situations like this occur, when there is an extended pause, there's a sudden pent-up demand that kicks in. And I think that's what Street is building in for FY25 now, that there'll be a pent-up demand, which will mean that probably will be close to double digit, if not the actual double digit in FY25. In terms of the other internals, across the board, you will see in all IT companies, there was a good margin performance coming in. The likes of Wipro, as well as Infosys had taken the impact of wage hike this time around. Despite that, they have managed to beat the expectation on the margin fronts. And most of the EPS targets that we have seen, there has been a raise of anywhere between 0 to 3-4% thereabouts. That has been led by the kind of margin resilience that the companies have reported. TCS had already delivered 25% margin when that was the expected exit rate. Even for other companies, we have seen margin expansions happening, and that's another positive news coming in for the companies. Deal wins continue to be steady. However, of course, there has been a bit fall off the cliff because Q2 was very strong in terms of the deal wins. So in Q3, we have seen normalization of that, and the commentary overall is turning out to be incrementally more positive than negative, and I think that's what Street is taking home with itself. Of course, in terms of valuations, they're not necessarily cheap. TCS 27 times and Infosys 24 times. Even the likes of HCLTech have managed to inch higher to 23 times. Yes, they're off the peak valuations that we saw in 2020 when they had reached levels of 30, 35 times, but we're higher than the 5-year averages. So on the valuations as well, it's not necessarily cheap. So it's a glass half full, glass half empty, but given the market is lacking ideas right now, I think, guys, the Street is clearly latching on.
Yeah, Anisha, clearly the Street is latching on any good earnings, and I'm sure the Street is seeing it as half glass full rather than half glass empty. And let's put that question to our experts. We have Kunal Bothra as well as Shahina Mukadam joining us on the show. Very good morning to you, Kunal, as well as Shahina. Shahina, we're meeting for the first time, I think, in this new year, so very happy new year to you. And Shahina, let's talk about the IT sector in particular, given the fact that top 4 IT companies have come out with good numbers, better than expected or better than what the Street was anticipating. And like Anisha said, any sort of a good news in the IT sector, everyone wants to latch on to it. Do you think that this good news will continue from here on? And do you think that the large cap IT companies will outperform the mid caps going ahead?
Well, very happy new year to you and viewers. Actually, the IT companies came up with very decent numbers, and considering that there's an underowned sector, I think there is buying that has started to come back into the sector. Even if you see the numbers, order wins for the quarter, but if you heard the commentary, I think all and most of the managements were of the belief that this is going to be the year of bottoming out. And coming year, FY25, is going to be a much stronger year for growth. So I think to that extent, one is looking forward to, the year next year, where I think the earnings are likely to come back. We've seen a bit of improvement in overall margins, which I believe should sustain onto the next year. So I think next year should be a better year, and valuations, in my view, are still not too stretched. They are still reasonable, and we are seeing buying coming back into the sector. And I think one can take their pick in terms of the large caps. I would prefer TCS because while their American markets, US markets have not done that well, but I think they are pushing growth in the other markets. And as you mentioned also that the margins have moved up. So I think overall TCS, while remains the most expensive, in my view, remains a very stable, strong company to hold for the longer term.
Thank you for that. Thank you for that. Now, Kunal, I remember specifically that you were very bullish on the IT space ahead of the results. Now, given the sharp up move that we have seen in this sector, what is your view currently?
I believe that this could be a starting point. This may not be the ending point where these IT stocks may, find charm across a lot of trading spaces across markets, because what we've seen is a very distinct kind of a price and more of a volume action. Now, for example, on Friday, we saw out of the 10 stocks where there was long built-up formations, 7 stocks were from the IT stocks, and that includes the likes of Infosys, TCS, HCLTech, Coforge, etc. So there was a huge build-up of long positions which has already started to happen for these IT names. The other 3 names, for example, the likes of Persistent, I think Wipro, etc., had seen a major unwinding of positions or short covering for these stocks. So I believe that when you see such kind of a strong price action and a skew completely from the volume spaces, it indicates that a new trend is in the making for these IT names. So, yes, one part is that these prices have moved up extremely quickly for these stocks. Maybe over the next 1 or 2 weeks, the prices may cool off a marginally bit from current levels, just for the indicators to get back into a neutral territory. But I believe largely from current levels to say another 3 months or so, many of these large cap IT names and the mid cap IT stocks, I would probably expect to be at least 10 to 15% higher from where they are trading right now.
All right, so that's the view coming in from both of our experts, and Kunal is of the view that this is not the end but the beginning of the rally that we are seeing in the IT pack, Somit. But on